Hello, my friends. This is Paul Drockton with Drockton Bullion, guaranteed lowest prices on silver and gold anywhere. Visit my website, www.drocktonbullion.com. Today, we're going to talk about the Comex, the commodities exchange. We're going to talk about where silver price comes from. We're going to talk about supply and demand of silver, how much silver there actually is. And I'm going to show you clearly that the upside for silver is just ginormous. I don't know what else to say. So first of all, let's start out with a brief explanation. I'm going to go ahead and share the screen with you so that you can see my computer. And we're going to go ahead and start right here. So basically, first thing I want to show you is I want to show you that we start looking at the Comex silver stocks. What we see is that within the Comex, registered silver inventories, which is silver that right now is been registered for trade, basically has been at historic lows. So if you follow the trend backwards, in 2008, there were over 90 million ounces of silver in the Comex depository. So 90 million ounces. Now, I want you to think about the laws of supply and demand. The way it should work is as supply goes down, right? As supply goes down, as something becomes more scarce, depending on demand, you should see prices go up. So look at this. As we follow the trend from 2008, 90 million ounces of silver in the Comex depositories, all the way down to 25.3 million ounces in the Comex depositories in 2012. And then we see it rise again here in 2015 to almost 70 million ounces of registered silver. Now, I need to explain this to you. The Comex depositories, they serve two purposes. Depositories are there basically as storage facilities. So individuals that own silver and gold will store them in the Comex depositories. Those are different than registered silver stock. Registered silver stock means that right now there's a futures contract being traded against this silver right here. So registered means it's available for sale, available for trade. So when you start looking at the Comex, what we're talking about is we're talking about silver that's been placed on deposit because it's basically being traded right now. At the end of the trading, that silver should be shipped out to whoever bought it. So that, my friends, is what it means when we start talking about registered silver stock. So clearly, when we went from 90 million ounces of silver in 2008 down to, 25.3 million ounces, that's a drop of almost, 70% in inventories. You should see prices going up, but they didn't. So the question is then, if supply and demand isn't controlling prices right now, then what is? Well, let me show you. First thing I need to show you is I need to show you the bank participation report. So what this is this is the U.S. Commodity Futures Trading Commission's report. You can see up here it says cftc.gov. So this is the government's reports, and banks are basically telling the government how involved they are in the futures market. So down here it shows Comex silver. Now, U.S. banks and non-U.S. banks can both participate in the futures market. In other words, they can buy and sell futures contracts, both for and against silver. In other words, they can buy and they can sell. So long story short, look at this. There's 4 U.S. banks participating at this time. There's 19 non-U.S. banks participating. Now let's come across here. What we see over here, these are called call futures. What these people are betting is that the market's going to go up. Now these contracts usually, right, relate to people that are buying. Over here, these are the put contracts. So one contract is worth 2,000 ounces of silver. So according to this, right now there should be about 150,000 ounces of silver that are registered with the Comex depository, waiting for the contract to end so they can be shipped out. So what I'm looking for right now is I'm looking for 150 million ounces of silver that's registered with the Comex depositories, right? Now, what I'm going to show you now is this report. Now, this is today's depository report. And if you take a look at it, you will see when it comes to silver, troy ounces, right? These are the different depositories. The totals are at the bottom. The total registered inventories are only 38 million. That's it. So basically, looking at the bank participation report, we see the banks are selling 150 million ounces of silver, which should be on deposit right now with the Comex. But notice, there's only 38 million ounces of silver that are on deposit. So what does that mean? Well, that simply means that for every real ounce of silver sitting in the Comex depository, right, there's what, almost 4 paper ounces of silver that don't exist. Now, if I were to do this on a regular basis, I'm going to drive the price down. I'm going to drive the price of silver down. By driving the price of silver down, then I, as a bank, can guarantee it the lowest possible cost for when I buy it. So there's a lot of financial incentives for manipulation of the silver market from the financial institutions. Number one, it scares people out of precious metals because everybody's looking and thinking, wow, price is going down. Therefore, supply must be going up or demand is disappearing. The reality is what we're dealing with paper contracts, paper silver that's being thrown in the Comex as if it were real. So realistically, if you were to compare this number, the total registered number of silver, against the futures contracts that claim they're selling silver, that's a pretty big discrepancy. We're talking there's only 38 million ounces on hand, and the claim is that they're selling 150 million ounces. So what is that? About 4 times as many paper ounces of silver as there are real ones. Now apply that to price. If silver is $17 an ounce, using these numbers, the price should be 4 times higher right now, today, which means you're looking at $68 an ounce is the real price today, $68 an ounce. Now, going forward, as banks start struggling with liquidity, they're no longer going to be able to do this. They're not going to be able to play this game. Now, I hope that when that happens, there's still silver for sale. But clearly, spot price will be irrelevant. It's not going to matter. The market is going to take over, and people are going to be able to name their price when it comes to buying silver. So those that have, they'll be able to sell it for a whole lot more than spot, and those that don't have are going to want to buy it at whatever price they have to pay for it. This, my friends, is the strategy behind owning precious metals. So we're talking about silver today. I want you to understand this. Remember what I just showed you. There's about, what, 40 million ounces of silver sitting in the Comex that are registered. That means that they're being traded. And we've got almost 150 million paper ounces, right? 150 paper ounces, 150 million paper ounces, which means that the price of silver should be at least 4 times higher right now, just based on the laws of supply and demand. Now, realistically, as silver continues to become more and more scarce, as it continues to disappear, then demand is going to drive it through the roof. The problem is it takes almost 5 years to bring a silver mine into production. And right now, the spot price of silver is almost $7 less than the price of production, which means if a mine wants to bring out an ounce of silver, it's going to lose $7 per ounce because it costs 25 bucks an ounce to bring it out of the ground. So I think you're beginning to start to understand why it's critical that you start investing in silver today. This is your best investment right now. Get it from me, Paul Drockton, Drockton Bullion. We've got a special going on right now. You can buy 1 ounce, 0.999 pure silver ounce for as low as 49 cents over spot. That, I guarantee you, is the lowest price anywhere. This is Paul Drockton with Drockton Bullion, www.drocktonbullion.com. Thank you for listening, and of course, have a great day.